Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Brad Kooima of Kooima Varilek. Well, the grains mostly higher to start this morning, but corn starting to lose a little ground. Over in the livestock, cattle have been two-sided right now. To the plus side, hogs are mostly lower. So let's talk about the cattle market. Brad, first of all, we had lower weekly closes again last week. We made new lows for the move, but do you think we're at a point where the bleeding is about ready to stop?
Short answer, yes, that's about where I'm at exactly. Michelle, thanks for having me on this morning. Obviously, we could talk for an hour about all the things to unpack on the cattle. Some encouragement just from the action on Friday, ability to come back, close, better off the lows. But I think if you want to, reason I'm feeling just a little more hopeful, maybe is a better word, than confident about the market is because of the levels that we pulled all the way back to. I mentioned on your show that I'm saying this somewhat tongue in cheek, okay? But someone had said that they thought that the reason the market got so good was because of the Brazil tariffs. I would disagree strongly that was the main reason. But nonetheless, those went on shortly after the 4th of July. The market did have a monster rally after the 4th of July, both feeder cattle and live cattle. And for the most part, were led by the feeder cattle as they were led on the downside this last break by the feeder cattle. Well, so you would say, well, where, just out of curiosity, of course, that's what nerds like me do. They look at the charts and go, well, Feb cattle was at about 215. That's where we broke out from. What last week's low on Feb cattle is 215.02. January feeders finally broke out of that 3 to 310 range, and then never looked back after that 4th of July weekend. Went straight up to 380 something. And what was last week's low on the January feeders? Well, it was 311 and change. So, I could make a case that the market came all the way back to where some big key breakout point was, and often the market will do that, and often it'll hold at least the first time against those levels. So hopefully we could calm the news a little bit. I say that with a very lack of confidence that we can. The problem with changing news, as I've said a million times, is that uncertainty is bearish. Don't kid yourself. If you're a long speculator, you don't need this. You go like, I don't want to have to react to the latest social media post. I don't want to have to react to something that I have no control of overnight. And as well as the fund manager that's deciding whether or not he wants to be involved in a market like that. So I worry that we've chased some of the longs, and now we can get them back, but it might take a moment. Have a nice action today, though. We open lower and trading sharply higher. It's perfect action for the day. I'm happy so far.
Yeah, I've said it many times. The fundamentals haven't changed, just the psychology of the market, unfortunately. And that's to your point about the funds and what they're doing. Okay, let's talk about the elephant in the room this morning, which is this DOJ investigation on the packers and price fixing that the president called for on Friday. What impact could it have on the market? Is it necessary, and what could it mean?
Well, if I may at first, anybody that knows me at all knows that I have been a very vocal advocate of price discovery and price transparency. Worked very hard at it to the point of extreme frustration, where it seemed like we had a chance to maybe affect real change, only to have that stall out. So know that I believe that the packer is not our pal. And know that I would be all for any kind of real change. Now, having said that, and having been part of some of this dialogue, I'm going to be a little bit sarcastic here, but I mean, seriously, we couldn't find anything that the packer or the wholesaler or the retailer did wrong during COVID. You got to be kidding me. I mean, the 3 blind mice could have found these people. I mean, I can't even, okay? I mean, if we were unable then to find something, I am wondering about now. How about the COVID, or how about the Holcomb fire?
I was going to say, we just came off the Holcomb fire right after COVID. So
Yep. I made a lot of
before COVID.
Yep. Testified in some circles about that. We killed more cattle after the fire than before, yet They were able to break the cash sharply and rally the boxes because the DOJ told us that. You know why? Well, because we have Labor Day demand. That's why it rallied. I mean, you can't make it up. So anyway, let's try to keep it on the up and up here. If they could affect real change, if they could look at the way cattle are formula priced, even better yet, if they'd look at the way box beef is formula priced, I think that they could learn some things. I think you could take that all the way down to the wholesale and retail level. But I can tell you that it's not my fault that hamburger cost $8 because I'm a cattle feeder. It's not the rancher's fault that ribeyes cost too much in some people's opinion. So maybe if we can at least cut through the clouds there and you know, I don't know. Off here, I said, you know, if you point the laser at them, would they maybe fly in formation a little better? Maybe for a while. I'm on the producer side here, folks. But if you're really thinking that this is going to affect change in a big way in the short term, we'll probably be let down again. But I'm on our side, guys.
Yeah, I'm with you. I'm on the producer side, but even breaking up the Packers, even if they were able to break up the Big Four, that wouldn't necessarily solve the problem, would it?
Well, that would be extremely painful in the short term, in my opinion, as a market analyst. It would completely disrupt the kill schedule for a while. Now, is it worth it in the long term? Would it be worth it in, say, 3 to 5 years? Probably.
Okay.
The short term, though, would be extremely difficult for the market, I believe. So now, a little bit of history of markets, a study of them anyway. Big oil, long time ago, but they did break that deal up. It was a very similar oligarchy type situation in the market. So it is not completely without precedent, although that was maybe a real different era then. But so it's not completely without precedent either. So one never knows. This administration is not afraid to say what they want, and often they get what they want. So we shall see how this one plays out.
No doubt. All right. So we said fundamentals have been king here, including the cash market. Let's talk about what happened last week and what you expect this week.
No matter of hyperbole or narrative changes the fact that the supply of cattle is still very tight and going to stay that way, whether they open the border of Mexico tomorrow or whether they take the tariff off of Brazil on Wednesday. Okay. That's not going to change as we move toward the end of the fourth quarter here, nor as we move into the beginning of the first quarter. So one thing that has changed here fundamentally, in my opinion, is you've flipped. The one thing that has been accomplished is we've got margin back for the packer. Okay. Cash market down a long ways. Boxes are still up here at a profitable level now. I think the next thing I'm waiting to hear here in a week or two, as we get maybe closer to Thanksgiving or the week of Thanksgiving, or at least the week after, that you'll see here pick up in the kill because, hey, we got to get some meat around us for the holidays. And then usually the rib meats, the middle meats take off. And I fully expect that again. So maybe we're 2 weeks away from some of that. But in the here and now, we sold cattle here on Friday for $225. Not a lot of them, but a few. Carried an awful lot of cattle over too because we didn't like taking that sharply lower money. We've got cattle from northwest Iowa that are going to get hauled as far as Greeley, Colorado, as far as Texas, and as far as places in Kansas. Okay. So
that's bullish.
Yeah, really. That's not negative. I mean, that would still profoundly show that the supply of cattle is still in the north and not in the south. And that's largely because of the border being closed.
All right. Well, let's hope we can recover here. It has been a tough down move for sure. Quickly, hogs, December's been holding up because it has to stay close to the index, but the back months, new lows for the move, and it looks like a train wreck back there, doesn't it?
I wished I had something, an encouraging word here. Yes, December is tied to the index, and that's the only thing that's any good here. I guess I kind of half jokingly say the only thing you have good to say about a market is that it's really oversold. You don't have a lot of good things to say. And that's certainly the case in the hogs. We've been severely oversold technically for 3 weeks now already, and yet show no life. The problem here is when you have this much production, you have to have perfect demand. I think demand's fine domestically, but it's not globally. The latest round of seeming like we're getting along a little bit again, see the beans with China would indicate to me that their total lack of interest in pork would tell me that their pork industry is back on its feet, that the production is alive and well. In fact, the price of hogs there is very low. So I would say that they've got lots of them. So it's a two-edged sword. It's negative here in the hog pit, but hopefully it means that they have to buy some feed from us too.
And grains mostly higher except for corn, but some of this push has been talk of the government shutdown maybe possibly coming to an end.
Well, yes, I think that that's part of it, Michelle, for sure. From the standpoint of we're hoping that when we get them open, we can get a report or two out here that will find out, yes, the corn crop was still smaller than the last one and the one before that. And maybe there's even a little bit of export business out there that we'd like to have confirmation of, specifically and particularly talking about China. As you and I have talked over and over, China is not the most reliable trade partner. You can't always take them on their word. And so we, after this big up on the beans here, based on at least largely on the idea that, hey, China's going to come back in and buy some beans from us, well, then they'd better. So be just a little careful here, guys, after this big a move, especially I think on the beans. Now the corn market, I don't know. To me, we got a big crop. It's not that great big record thing that they were advertising here 3 months ago. But it's going to be hard to move the needle very far on the corn, and we've had a bit of a bounce here. So I'd like to think we could get a little more out of both of the markets here, but be a little careful. I still think we got a lot of supply and some uncertainty in terms of the exports. Yeah,
and you had a $1 rally in beans and only got 15 cents out of the corn because we keep running up into chart resistance too, right?
Well, yeah, we're right up against resistance. Wheat's at nothing. You got a lot of struggles here with that to drag the corn along.
All right. Thanks so much for your insight, as always. Brad Kooima with Kooima Varilek. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.